Hello everybody, and thank you for your interest regarding how we renovate and flip US properties for profit. My name's Colin Coy and I'm the principal of Cashwich Properties. We've been inundated with inquiry on how we do this, so I thought it might be easier if I put together a short video outlining exactly what our services are, so you can watch it at your leisure and see exactly how we help people make profit. So, why the US? Well, the reality is most of us are aware that it's on sale. Now, a lot of people look at investing when they buy properties just for rental returns. However, when you start to move towards being able to renovate, this is when you can create serious wealth. So let me show you how we've helped our clients generate anywhere up to 30% by flipping US houses. What I want to do first though is cover just a few areas quickly. First, why the US market? 2, what opportunities are currently available? 3, what we do? 4, how we work with you in a JV? And 5, your next step if you're interested. So why the US market? The reality is it's some of the lowest prices we will ever see in our lifetimes. We have a spectacular exchange rate, some of the best we've had in over 40 years. Most states have little to no stamp duty. There is a massive potential capital growth over time. The advantage you have in the speed that you can do deals. There's a huge variety of different types of properties available to do. Ease of purchase for international buyers. It's a stable region, accessible for international travel, and the attitude of the American government for overseas buyers is fantastic. The reality is it is spectacular for potential profit returns now. Or it could be just a perfect storm with everything coming together and a great opportunity. So, how do we generate profit for people? The reality is there's 2 ways to do this. First is we look for the best profit point or the highest return. The way we go about it is actually manufacture profit. And what I mean by that is how we renovate a property to improve the value of it so we can resell it and generate a higher return. The second way is actually faster turnover or the velocity of the sales. Now you don't see this a lot in Australia because our purchase price is extremely high. However, in America where you can buy properties so cheaply, the returns you can make by flipping them out quickly over a day or 2 or a couple of weeks is phenomenal. So I'll go into that more as we go along, or a combination of both of the above. So there are basically 3 areas that we work. One is what we call wholesale to wholesale. Think of it like a car yard, how they wholesale cars in and out. The second one is where we wholesale, we renovate, and we flip it back out or resell it back out into the local market. The third one, what I'd like to discuss as well, is potentially buy and hold some of these properties as long-term rentals, because one day down the track the capital growth will certainly be worth the effort. Okay, so how do we go about flipping properties in a wholesale to wholesale type scenario? What I have here is a great example. This property was worth well over $300,000 at the peak of the boom. We purchased it for $35,000. We flipped it out literally the next day for $40,000. The money was paid back by the Monday or a couple of days later. We were back out at the markets again purchasing by the Tuesday. Now what you've got to realise here that there was no rehab cost, no holding cost, no closing cost, no tenant problems with a broken toilet or anything like that. The astonishing return is if we could do this just twice a month for 10 months of the year, that would give you a 57% return. Pretty good. Here's another property, similar situation. We picked it up for $28,000 and sold it within a couple of days for $33,000. Again, no holding costs, no rehab costs, and no closing costs. If we were able to do this with $28,000, and again basing it conservatively on doing it twice a month for 10 months of the year, you would generate a 71% return on your money, or an incredible $20,000 a year cash flow. Here are 2 more examples of what we've been doing. And again, if you look at them, like the top one for example, we picked that up for $25,000. We flipped it out or wholesaled it within 2 days. The reality is the property was worth $36,000 in the current market. And what you've got to realise is people will always go for a bargain. So it's easy to resell these. The bottom property was purchased for $47,700. It was worth somewhere around $78,000, and it was flipped out within 7 days. And again, here's a whole cross section of more properties that we've done for the month. As you can see, the returns work out pretty good. So what's the benefit of wholesaling properties? The reality is it's an extremely low entry cost, somewhere between $30,000 and $60,000. There's little to no rehab costs or renovations, as we would call them in Australia. Occasionally there's a little bit of clean-up or a few things to do which can help, but in most cases there isn't. There is no tenant worries. It's incredibly high returns. It's great cash flow because you've always got money coming back in and you get paid quickly. Okay, number two is where we pick them up for a wholesale price, put some effort and time in by renovating, and then we flip them back out into the local market or resell them back out. Let me show you a couple of examples of that. The reality is, how do we come up with these properties? Well, as we're doing the wholesale to wholesale, what comes up is occasionally what in the industry over there is called a jackpot deal, where it is a fantastic buy, where it's worth spending the time and putting the effort in and a little bit more money to resell it for a higher profit. A couple of things to keep in mind though, that these properties usually take 3 to 4 months to complete, and the reality is that they're at a higher price point. So here's an example of one property. You can see the top photo and how much work we put into it by the bottom one. Your kitchen. And again, one of the things to look at when you're doing this professionally, and there's an old saying, you need to put 100% renovation in to generate 100% return. The living area, the bathroom, and the pool that they did up out the back. Photos as we went through. Okay, this property had been purchased for just $75,000. Renovation costs were $38,000. It was resold for $160,000. So that's an incredible return of $47,000 or 53% return on money. It's pretty good for 4 months. Here's another one. It was purchased for $105,000. Renovation costs were just $33,000 and resold for $193,000. You can see what it looked like before. And see, where a lot of people go wrong is they actually can't see what to do with these properties. They all want to be able to do, but it actually takes a level of skill to work out which properties work and which ones don't. And here's what it looked like afterwards. Again, a $55,500 profit or 39% return on your money. Again, the question you ask is, if you were to do this 3-4 times a year potentially, what's your return? It's pretty good. So here's how it works. The reality is, every week currently in America, hundreds of properties come up at the foreclosure auctions, and they sell somewhere between 60 and 80 cents in the dollar. What we do is look for the best bargains, and we look for the ones that have the highest profit, so we point our money towards the highest yield, not simply buying a property for the sake of it. In reality, a lot of these properties are as low as 20 cents in the dollar pre-financial meltdown in 2007. The other advantage we have is we work with the only company that checks all the properties out. So prior to them coming out, we know what we should be bidding. We know what they're like in most cases. So it's a fantastic opportunity. Now, the people we work with are extremely professional, and they have a large team. They have their own property inspectors, drivers, researchers, bidders, agents and rehabbers, etc. What I want to do now is actually show you some of the work we go to actually analyse a property and see which way it should go. This particular property here was actually purchased for $201,500 at the peak of the boom. Now, it's actually 3 units in the complex, and we're purchasing just one of them, which was a 2-bedroom. But again, a few years ago it was $201,500. The data today show that it's worth somewhere around $61,000 to $65,000, as you can see for the information we have there. So that's the reality of the realistic value of the current market. A lot of people try to sell you and say it was a $200,000 property and pay $100,000 for it. You must see data to see what it's currently worth in the market. So we picked it up for just $38,000. Now, if this property had been wholesaled out, we would have put it out for $42,100. Again, why would we do that? No rehab, no holding costs, no closing costs. It's in and it's out quickly. Now, the profit you would make out of this would be $1,000. The auction and bidding fee is just $2,100, and Cash Rich Properties earn $1,000. If we were to do this just twice a month for 10 months of the year, that would give you a return of 55% a year. However, we looked at this property that was potentially able to flip it out as what we call a wholesale to retail, and very little work at all to do it up. So we looked at putting it back on the market at $57,000. So here are our purchase cost at $38,000, auction fees were $2,100, HOA fees were $2,000. HOA is actually like your body corporate. That's just what they call them over there in America. We put in some new appliances for $1,300. Selling fee or through the local agent was $3,000. So our total cost was $46,400. the potential profit split would have been 10,600. You would have earned 50% of that, which would have been 5,300, and Cash Rich Properties would have been paid 5,300. Again, if we did that 3-4 times a year, your return is phenomenal. We also analyse the properties for cash flow to decide whether it's one that's a good rental and potentially buy and hold. This particular property, and our figures are done conservatively, which if anyone would like to see them, I'm happy to go through and explain them in more detail. The reality was that we put a first mortgage at $38,000 at 7% interest rates, which is similar to what you would get in Australia if you were taking it out of your equity loan. This particular property, with also an 8% vacancy rate, runs cash flow positive of $198 per month. Now when you think about it, for $40,000, most properties you buy in Australia as an investment are negative. So again, looking at the return, your actual return on investment is 14.2%. So you'll say to yourself, well, why don't a lot more people do it? The reality is a lot of people want to, but they really don't know how. They don't have the time, so they end up getting 100% of nothing. What I want to show you is how you can actually get a return without having to put the time in. So how do we work with you? We actually work on a split of 50-50. We split the profits, so you get 50% and we get 50%. The reality is I like to pay people checks and they see returns. So let's just go through exactly what needs to happen if you're interested. Initially, you need to set up what they call an LLC. Now, an LLC is a limited liability company, and that protects your assets over in America. You also need to set up a bank account in America so your funds can be transferred in and out. We have a coordinator that will actually assist you in doing both of these. Our initial commitment fee is $6,600, which you pay up front. Now you supply the funding for the deals and the rehab costs. You need to sign a JV agreement with ourselves, which please feel free to take to your solicitor to have checked out if you'd like. You need to transfer the funds to our JV account. The money is secured by a promissory note or like a guarantee from our foreclosure company. Now the properties we purchase are always worth significantly more than we pay, so you're always in front in reality. The properties were required are rehabbed or renovated, as we call it, then placed back on the local market. Now, usually a payday conservatively for a wholesale to wholesale deal is between 2 and 3 weeks, and for a whole renovation type property is somewhere between 60 and 150 days. Again though, in reality we've done some wholesale to wholesale deals within a day, and we've had some full renovations which have been literally totally back out within a few weeks. So again, going over how the profit split works, is you, the investor, receive $1,000 US, the foreclosure company gets $2,100, and appreciate if you approach them directly, it would be up to $3,500 just to bid for you, without including reselling the property. Cash Rich Properties gets $1,000. Wholesale to retail, where they put it back out in the MLS or the multi-list service, you, the investor, would receive 50% of the profits we made. The foreclosure company gets 25% and Cash Rich Properties gets 25%. In reality, I split our half with the foreclosure company. Now you might say, why would I do this? In reality, the more you can look after someone else, the more they will find you great deals and work with us to have the best deals on the market. Now just a side note, if you're interested in ever keeping any of the properties that we find, if you're part of the JV group, you only pay $2,100 to the foreclosure company, and Cash Rich Properties $1,000. However, if you're not a member of the JV group, then you pay us a buyer's agent's fee on each property of $6,600. I know that's been quick and straight to the point. I personally hate these webinars or videos that go on for hours and hours and don't really tell you anything and just pad it out. If you have any interest, please contact us on our email or by Skype, or give me a call on the mobile, and I'd love to talk to you. And if you have any questions, I look forward to that. Again, thank you very much.